Hi, and welcome to Unit 1 Topic 2, Portfolio Diversification. In this topic, we will be discussing the importance of portfolio diversification and how portfolio diversification works. So, diversification in a portfolio is an attempt to minimize risk and maximize returns. It is useful in minimizing risk as it has an assortment of investments in different industries with low correlation to each other. And different industries with low correlation react differently to events. And low correlation is a key word here. So, for example, if you take a look at this example portfolio, this would be considered a diverse portfolio as it has investments in industries that have extremely low correlation to each other. But if we change these industries into hotel industry, food and beverages industry, and also the airline industry, this would not be a diverse portfolio, as these industries all have high correlation to each other, and it would likely be affected by a single event. For example, the 9/11 travel industry shutdown or the coronavirus pandemic shutdown that all affected a lot of the travel industry. So, in addition, a diverse portfolio should have investments across different asset classes, such as blue chips investments and junk bonds, to manage the amount of risk taken and also allow for high return investments. So we usually invest in different asset classes by looking at the investing pyramid. So on top, we have the risky emerging market stocks, the junk bonds and options. These are usually considered the most risky. And with these, we can have a high risk and high return investment. Then, following up, we have the blue chip stocks and Royal Trust. Blue chip stocks include big companies such as Amazon, Apple, and Boeing. These are fairly risky and they give a fair return. Then after that, we have government bonds and high-grade municipal and corporate bonds. These are less risky and they also give a small return. And then at last, we have savings account, cash, and treasury bonds. These practically have no risk, but they only give off about 1 to 2% per year in return. So by having all of these in our investing portfolio, we can ensure that there's a chance for high risk and high return, and that we can keep a lot of capital even if the market goes wrong. So, over-diversification. What is over-diversification? Over-diversification occurs when an investor invests in way too many industries and sectors. So we usually consider it over-diversification if an investor invests in more than 15 stocks. We consider 15 stocks as the optimum for investing. Over 15 stocks, you are not doing much to reduce the risk in a portfolio, and you're into the dangers of over-diversification. The dangers of over-diversification include the limiting the impact of large stock gains and impact your upside. So for example, if you have your cash split evenly across 5 stocks and a stock goes up 50%, you would have a huge upside in your portfolio. But if you have your cash split between 20 stocks and one has a 50% increase that day, it would only have a minimum amount of upside on your portfolio. And in addition, it would become difficult to manage. To keep investing in stocks, you should always look at the company's financial statements and how the company is doing financially. But it would be hard to keep track of that if you're an investor that invests in more than 15 stocks. So, important note about portfolio diversification. So, while a diversified investing portfolio is important in minimizing risk and maximizing returns, you should always make sure to only invest in industries and companies that you know a lot about and is confident in. Never buy stocks just for the purpose of diversification. And the opposite comes true. If you have one or two stocks that you have done a lot of research about and you're extremely confident will perform in the future, then go for it and invest in that. Of course, you will be taking a fair amount of risk, as a single event could have a catastrophic impact on your stock. But make sure that is the risk that you're willing to take, and there's a high chance that you will be rewarded.